Looks like we could be getting our first trade of the week here. Just going to pop the risk below that thrust candle there. Market just above that naked level up there, and then it's quite a big target on this one. We're still going for that big fucking swing of 500 pips. Let's have a look a bit to see where this target would be. Still all the way up to that higher time frame supply level. Pips are lowered a little bit down to about 412 pips, but let's get that target whacked in at just over 1,600. So we'll do 1,600 exactly. Right, let's have a look. That's going to be 60 quid. Yeah, we'll take that. Whack that order in. I'm going to take a look at the old trading view charts now and see what's going on there. So we've just had CPI release. Love standing in front of levels like this with big news coming out. Hopefully we trickle down to this towards the end of day today. Get filled in. We have got the interest rates released at 7 PM this evening. Now hopefully this holds out and gets filled during that trade. We have another consolidation here. Quick out. Could be deleting this pending order before the news. I mean, fortunately I'm able to be at the charts all day, every day, 5 days a week. So I can keep a close eye on that and decide what I'm going to do in that moment. But for now, even if I'm triggered into this, going to hold it through that news event. We'll see what happens around about 7 o'clock this evening there. Right, then let's take a look at the old trusty edge bonk. It's popping into the journal. New entry. So it's taken about just before 2:30 in the afternoon. Nice opening US session there. Liquidity pool setup. It's not the cleanest double top in the world, but we're looking to hold way past that due to the fundamentals of this trade, as we spoke about in the previous video. We just found a new entry. Already know the reasons for the trade there. Now it's a valid setup. New York session. The trade confirmation. Price bust through ATR. Level was bang on the 50% higher time frame fib. Key SR level as well. And the retailers were at least 65% short, which is what we look for. Now a visual look at this. So price bust through the ATR. We've come down to test that level, although it's falling very hard. Currently we are in drawdown at the moment, so hopefully this holds before the next news release even happens. It's 4-hour chart then. Yeah, 65% short. We're holding steady. Shorts are increasing slowly but surely hour by hour. We're just waiting for this news release to come out. Obviously we've got some more again this evening as well, so I'll give you an update then. We'll be holding this trade through the interest rate news. Whether that's a good idea or not at this moment in time we'll see, but everything's hindsight. Notice that the US interest rates anyway aren't as volatile as the CPI, as the NFPs. They tend to be a little bit more steady. So that's why I don't mind holding through those sorts of events, especially with CPI out of the way now. That was the big one. Sorry it's been a slow couple of days. There's not much to update apart from this trade. It's been sitting on my hands really. So to make up for that as well, shortly after this I will be going through a PowerPoint just containing more in-depth information about my strategy, about each entry model that I have and how I manage that as well. But yeah, it was something to note as well. Edgebonk has kindly partnered with us. So I've been an Edgebonk user for the past 4 years now. Love it. Wouldn't ever go back to it. Obviously there are cheaper alternatives out there, but I don't wish to scrimp and scrape. This isn't that expensive for what it actually gives you in regards to the value. But yeah, link below. You'll be able to use the coupon code PIG and you'll be able to get a discount on there as well, which is nice of them. So it's going to hop over to that PowerPoint now and just go over my strategy a little bit, and hopefully with that strategy in mind, following the trades moving forward, full access to this journal. Where it is discretionary, it's not really a mechanical setup. There's going to be some differences there on what I look for and what actually is on play for me that day. So I'm about to close this trade. We've had a really nice 130 pip run up there due to the US interest rates that came out last night. Held through it, no problem whatsoever. Market just went straight up. Impact wasn't as big as the CPI as expected, although over the course of the evening and the Asian session we really just pushed for new highs there. So it's going to take this order out of the market now. There's a couple of reasons why I'm taking it out of the FTA here. Biggest one is the Japanese interest rates that are coming out at 4 a.m. this evening. Got some US news as well coming out a bit later on in the US session when I close before everything. Ideally, the plan moving forward now is to get a break of this double top, retest, obviously look for another entry there. I think this is enough. Market is in a place where I don't really want to be making big swings all the way up to the higher time frame levels, especially when it's only for like 60 quid and I can get like 20 of it down here easily. Get out the FTA, reassess and figure out what to do moving forward, because I mean US news can bring this all the way back down and I'm left with my dick in my hand when I could just be up a couple of hours here as well. I was going to log this in the journal and then I was going to go over the edge as well quickly. Nice, we've been patient all week and it paid off. That's what it's all about. Don't need to be in any trades Monday, Tuesday. We knew what was happening Wednesday. Sit on your hands, let the market decide what it wants to do. Have some ideas prepared ahead of time. And if those scenarios that you planned for unfold, hit it, no expectations. During CPI, market plummeted into this level. Absolute no pulling back whatsoever. It took 2 candles to reach my level and one of them was quite a significantly larger one. And just that week on the Friday over the weekend we planned to already trade this level, no matter if that comes back here Monday, Tuesday, Wednesday. We expected it to be the Wednesday because of the volatility, but traded straight into it, no questions asked. If it went to stop loss, it went to stop loss. That's my plan, that's what I was going to do. It just worked out for me this time. Now looking at the trading journal for this trade, so what have we got? About £19.97. I got actually paid last night in the swap, so it was a little bit more than what I closed it out for. I mean usually they take money from me in swaps, but this time they decided to pay me, which was nice. Now the main reason for holding this trade and not getting out the FTA is the daily hammer and the weekly hammer on the higher time frames. I was looking to scale into this position originally. Did take a look at the news and the JPY interest rates. It's just putting me off. I feel like I don't need to be holding this trade at this moment in time. Very clear level above. If I am right on this trade, I'll get a break and retest moving forward. Now looking at the screenshots as well. So this is what it looked like before I was going to enter it. We slapped a pending order in there. Retailers were 65% short as well, which is a good sign. And then straight up in the evening over the Asian session as well as the UK Open, we came in, decided to manually exit this trade. Brilliant trade all in all. About 130 pips, not quite the 500 I was planning to take, but so far we've been able to take 130 of the 500, so maybe we'll have to just take that in chunks instead. I think that's going to be the smartest thing to do there. Right, it's going to take a look at the edge now as well, most importantly. Now, talking about edge, most traders have more edge than a car tyre, let's face it. I mean, you're just throwing shit at a wall and hoping some of it sticks. So if you are in that sort of category, you'll be able to look at the liquidity pool, the levels and the higher time frame supply and demand entries that we look for. Now liquidity pools, a very nice trade. The main aspect of this is just locating a directional bias, whether that be long or short. In this case it will be a long position. You can see a very clear double top here. Got some chop all the way through that. Very good swing points away with a lot of gap in the middle. Now this doesn't have to stop at a double top or a double bottom. Triple tops, quadruple tops and so on. Best for larger swings as well, as we're getting this swing away. Market's coming back and we're getting a much deeper swing there as well. Now what I'd look for as an entry in this. This one's really special in particular because this is the second touch of the double top. Market came straight back into this area, didn't quite make it there, decided to reverse and then gap down on the open on Sunday. Since the gap we then pushed even lower, created a very slight flag pattern that occurred there with an interesting hammer that I wanted to trade with a naked candle into that level. And then once you trade into that level, stop under the hammer and you're targeting the last previous highs there. It's about a 3.5 hour trade there. So all you're looking for is a level. Now, don't let the market almost make that third drop and then think that trade's done. That's not quite the case. That just builds fuel for the fire when you are taking out those stop losses above market there. Moving on to the levels trades as well. These are more areas that I look for to trade these days, and then the entry itself is a specific candle. So the more touches to a level, the better. Creates a stronger trade bias, and you want to see those big swings away with some space in between those as well. So you had the first touch, market swung away viciously, came straight back in, went actually past the level that I was looking to trade. Then we came back and tested it 2 more times, quite decent swings away. But then the market did finally break, and this is the kind of break that you want to see, that when your level is about to break, either that long or short. Now, looking at an entry model for this, what I would be looking for is the last naked candle that's a swing low or a swing higher. In this situation, we'll be looking for the last swing low, and then you'll be whacking your order in there, slap bang on that level. Stop loss behind the frost candle as well. That's the candle that broke the previous level with strong momentum, and you're targeting the FTA as well. FTA here, there was some support here, some resistance here, some more action going on here as support, and this is just a higher time frame demand level as well, so I'm just going to trade that into that and use that as my FTA. But you want to look for just clusters of support and resistance, usually if that higher time frame supply and demand is not really there. So looking to trade those higher time frame supply and demands. Now, naked candles have not yet been tested, are the only levels to enter. If no naked level is possible in trade, look for PA. That's incorrect. This should be all the way up here. That's lazy. So when I'm taking an entry in the HTF supply and demand, I'm just looking for a bullish signal to get in. It doesn't have to be a naked level. Sometimes I will just whack an order on the pink box itself. It's quite discretionary until I just build up some more data around this one, and I'm going to tweak that over time. But here in this scenario, price came down. This was obviously a signal that market is reacting from this level. Most likely that was a news candle as well. But then struggled to break any lower, and then you got this hammer here that I would have entered on the close there. Target just above the FTA, sorry, just below the FTA there. Got some candles building up, and then your risk is tucked behind that hammer candle. But those are the really simple couple of entry models that you can just look for and copy and tweak over time, whatever suits you best. But if you don't have an edge in the market, there's not much you can do apart from just guess your way through the market, which isn't sustainable. The only other thing you could do as well is collect market data, and that way you're always guaranteed to have an edge of some sort, even if your current one dries up. Be collecting a lot of data in the market as well, and just posting some of the analysis that I find behind that. Example of this at the moment will be the Euro USD gaps and what happens there. Don't really see too many gaps that often, but the one that happened this week really just piqued my interest in that. So it's going to see if I can find a couple more like that and how the market reacted around those sorts of environments, and post the results from that. Been a bit of a dead week, to be honest with you, though. Hopefully, because all this main news will be out the way from tomorrow, not really looking to do too much else this week, to be honest with you. Let's have a look at the other markets and how they held up. See, AUD USD came straight up into that supply zone and just fucking plummeted since then. Not really any levels to trade there. That's a bit messy. That could still just come all the way back down. You're probably going to see a lot of consolidation in this market over next week, or at least by the end of this week. Again, another interesting one. Considering the state of AUD USD, I wouldn't want to buy this zone. There's no solid FTA above market. Price could easily come through this level now, and then retest it as a new supply zone, which I'll be interested in. That would be quite good, but wouldn't want to take a long in that position really. Nothing happening on GU, AJ. AJ's on a mad one. I mean, you could trade that level, to be honest with you. There's no naked. Oof. Yeah, so you could trade that. I mean, where's the FTA? I mean, you'd probably be looking at these highs here. Let's have a look at those. I mean, where's ATI lining up with that as well? That's missions away. Right, so yeah, here's a good example, a live one. Very good level there. This would be your entry. That would be your stop. And then this right there, that would be your target. To be honest with you, quite like that. Might get an order in there, to be honest with you. Let's see what we can do for that one. Looks like we can squeeze a little bit more out of the market. Hey, JPY, there we go. Whack a pending order. Oh, it's been tested on this. Doesn't look that tested, to be honest with you. I think, yeah, if it wasn't for spread, so 104.724. 23 quid. Whack that order in. Right, if this goes on, if this gets triggered within probably the next hour or so, possibly we'll come back and update it. If not, I will just do another video, just tidying bits up before the end of day today. So ended up getting out this trade manually at the first FTA there. Just didn't like the push up and the slowdown on momentum. Looking to get off the charts now. We're coming towards the end of the US session, and I'm not sure if I'm going to be able to manage that anyway. I mean, luckily I did it at X6. We came straight back down to the entry anyway. I've just entered this into the journal. Got slightly lower than expected on the target, so just need to update because the full target wasn't met there. But we ended up getting a return of about, let's have a look. So that's a pretty solid return there. 36 quid today, 6% overall, just over a 1 hour on that trade, I believe. Risk was about £12, I got £17 back from that. So not much else that I am looking for today at the end of this week. I mean, potentially we have the break and retest of the UJ. Now, whether I'm going to get that this week or not, who knows? I mean, we do have the interest rates for the JAPs to come out overnight, so hopefully we get the push of momentum overnight. We come back in during the London or even US session, and we could be looking to hold that one over the weekend, worst case scenario. But yeah, other than that, this trade is the only one we're looking for this week. Nothing else is lining up on the charts right now, so not much to do in regards to a weekly wrap up. I mean, solid week. We ended it in a profit. 2 trades this week, both of them on the same day. But if nothing sets up on the Thursday, and what day are we today? Yeah, if nothing sets up on the Friday, so I've marked both of these trades, this trade in wrong, sorry. So that was the 14th, and that was the 14th as well for the entry. Right, that's better. Yep, 2 trades, 2 separate days, 2.7% on this one, 3.3% on that one. Overall win rate 69, 26% return. Market's now broken out of the consolidation, and our take profit is just going to the moon by the looks of it. Yeah, unless there's anything to touch on tomorrow, this will be it for this week's video. Come back Monday, post one on Monday, maybe for what I am looking for that week ahead. But other than that, it's going to wrap it up here.